Hello, Jim Adams here from the Easy Investing Income YouTube channel. Today I want to share with you how I did selling options last month in January of 2022. I actually did over $3,000, which is kind of amazing considering it was a rough market in most of January. I believe for January, the Nasdaq had a 9 to 10% loss, and I believe the Dow was between 3 and 4%. So to be able to generate over 3,000 in income was really a surprise and a good thing for me. I did go ahead and start using my new guidelines and goals. My goal for the year is to average 2,500 a month, and by the end of the year, make 3,000 a month on my brokerages. And to be able to do that the first month, it's been kind of amazing. My guidelines, I've pretty much stuck with most of the guidelines from the previous year, but I am going to close positions when they're 85% profitable. And then I'm also going to be sure I do a better job keeping track of ex-dividend dates and using the weekly worksheet. And then at the end of this video, I'm going to go over all the different trades. I'm going to talk about why I made the trades, why I decided to take a position in a specific security. As always, these are securities I want to own. I'm not selling options on stocks that I don't want to own. They're typically value companies. They pay good dividends. So it's worked out really well for me. I've had very few get assigned, but the ones that have been assigned, I'm happy to keep them and then sell covered calls on them. Let's see, I did a total of 16 trades. I did 188 average for them. I did 12 put options. I believe 8 of those were cash secured puts and 4 were vertical put credit spreads. And I also did 4 covered calls. So I'm going to go over each of those trades. So I encourage you to stay till the end. And then as I go through each one, I'll talk about why I made the decision, and it'll be well worth your while. That being said, I do want to mention, please subscribe, hit that like button. And I do have a Patreon where I've got 2 memberships. I've got what I call the investor level, which you get access to all my spreadsheets. You also get access to my trades. As soon as I make the trades, I post them out on Patreon. So you get them literally minutes after I make the trade. And then I also do some special posting out there, things that I think the community could really benefit from. And then for the higher level, which is the traders club, it includes a weekly meeting as well as a Discord where you can ask questions. So I encourage you to take a look at that. It may be something you're interested in. So that being said, thanks for joining me, and let's go ahead and jump into the spreadsheet and I'll go over those trades. Okay, I've opened my January 22 trade journal, and let's go through the specific trade. So the first trade I made was a cover call, and it was on Intel. And this was a day when Intel was up. Intel recently had some not so good earnings, and I believe it's dropped into the high 40s. But at this point, it was at 56, and I sold 3 contracts. I believe I own 400 shares of Intel, so I sold 3 contracts. I already had 1 covered call with Intel, and I did 3 contracts, made $71 in premium on each contract for a total of $211, and the expiration was 2/11/22, so expired fairly early in February. And it was at a delta of 0.2004, so right there at that 20 delta that I like. And since then, I believe this one expired out of the money. I may have closed it. I didn't write that down. But it with the earnings dropping, and I believe, like I said, it dropped to 49 or so. I believe it did expire outside of the money because of the pricing coming down so much. The next one was another cover call, Coca-Cola. I own a lot of Coca-Cola. I inherited it, so my cost basis is really low. And what I do is I kind of have a chain where I've got different cover calls expiring on different months. So this one was for an 80 strike, so Coke at $80, I'd be more than willing to sell it, expiring in 1/19/24, so about 2 years. And Coke at that time was $60, so you're talking it would be almost a 33% return for Coca-Cola in those 2 years. And and then the delta was 0.145, so not very risky, like an 85% chance it won't reach 80. And I got $117 in premium per contract, two contracts, and I did over $232, so nearly $233. So not bad for a covered call with Coca-Cola. And then next, I did a covered call with Verizon, and this is one I haven't been able to write many covered calls on Verizon. Usually, there's not much premium, but early in the month of January, I did find some premium. It was trading around 54. I did a strike of 60, expiring in 1/20/23. So I did go a little farther out, but if I can get 60 in about a year, that would be more than a 10% return, which for Verizon, I'd be more than happy with that. And I did two contracts, made 134 in premium per contract for $266. So not bad. And again, I've owned Verizon a long time and I haven't been able to write many contracts on it. So next, I rolled a cash secured put on Big. Now Big has been up and down, and it's at that time. Let's see, I closed a position at 45 and I opened a new one at 42 and a half, and the delta was zero point 0.2, so I was able to lower the strike price and I gained 154 in premium, so not bad. And Big has had a really tough time with its supply chain, and I really think it's going to bounce right back up at some point in the future once the supply chain stuff gets ironed out. But their profits still look fairly good. They're getting hit hard for in my mind kind of a not a major downtrend. It's kind of not, they're not hitting the goals they originally set, I guess, a year or two ago. So that was a good trade. I did another big contract. Actually, the previous one was just for one contract. I did another one, and I rolled it from 42 and a half to 40, so I even went lower. And you can see here the price at that time was 44. And this one I went a little farther out. It would be expiring on 4/14/22. And let's see, I closed it at 42 and a half, and I opened a new one at 40, and I did it more like a 3 month contract. I went out about 3 months, and I made a net of 169 and took a little bit more risk. So I did a zero point 0.3 delta or 30 delta, so like a 70% chance and that it would expire outside the money. So here you can see it was a 44 and a half. So 40 is in my mind not very risky. So next I did a vertical put credit spread on Intel, and I did, actually this was a new one. So I sold to open at 50, and then I also bought the outer arm at 42 and a half. Both expiring on 2/18/22, which happens to be tomorrow. And let's see, I did a delta of 0.185, and that was on the $50 short. So not a whole lot of risk. A little bit better than a 20 delta. And then we can see here I made a net of 167, so I spent $15 closing each of the contracts, and I did do three contracts. So this is one of the first ones where I did three contracts. So part of my change in guidelines is instead of doing two, especially on trades where I've been really successful with, I'm going to do three contracts instead of two and make a little bit more premium. So for this I made 167, which isn't bad at all. And again, Intel is something I always like to own. Now it's paying close to a 3% dividend, so really good company. I believe it's still rated A level. And I think they're going to turn things around. They have some plans to build some plants here in the U.S., and I think their numbers still look good. They're still increasing dividends, so it's definitely a company I really like and want to continue to own. I did I did a cash secure put on iRobot. I sold it to open at 55, expiring on October 11th, and I did that at 0.169, so like a 17 delta, which is 83% chance it's going to expire out of the money. I made $1.30 on that contract, and for a total of 129.35 is what I made. So, and I've liked iRobot. I guess it's a little bit of a growth company. It's been probably one of the more volatile companies I've had, but I just like it. I like their vacuums. I like what they're doing and some of the future things they're looking at making. So that's iRobot, and it's worked out really well. I can always find really good premium with iRobot. The next is PG, Procter and Gamble, and I rolled a covered call. So, and let's see, I bought it to close at 150, and then I sold it to open at the same strike price, and I went from 120, 122 to 414. So I went a little farther out, but I made some good premium. Now this was, I guess, fairly deep in the money. You can see here it was 157. So I am a little bit deep in the money, and I don't think it's gone up much since then. It's hit its all-time high, and it's a really good company to own. So I'm going to do everything I can do not to have that assigned. Um, so the net I made 230, which isn't bad. I paid $7 to close the position, and I spent 946 to open a new one, which gave me a net of 230 for rolling that covered call. My guess is PG will come down once we have another correction, especially if we have a correction in these value companies. But hopefully I can roll higher next time. But I don't think I could find a whole lot of premium at a higher strike price. So let's move on to the next one, my ninth trade. This is a cash secured put in Franklin. This is they're an investment company. I think it's Franklin Investments, and I sold a cash secured put at 27.50, expiring 6 months out on 7/15/22, and it was a 0.174 delta. So actually, I took a little less risk this month and went a little bit lower and made $188.70 on that. And it's again a really good company. It pays a good dividend. I believe it's 3.5% dividend, maybe even closer to 4. So again, a company I want to own, pays a good dividend, high value company. Next, I did another cash secured put, and this is Fidelity. I believe in one of my previous videos I made the mistake of thinking this was the Fidelity Investment Company, but this is an insurance company. Again, it's A rated. It's a real good company. It makes really good profits, and it's been growing dividends a long time. It's one of the aristocrats. So again, another company I want to own. And I sold a 46 cash secured put expiring on 6/17. So I did go out 6 months for it. Again, I didn't take a whole lot of risk. Delta 0.174. It looks like the stock was at 54.31. And I made $188 on that, so not bad. So you can see I've mixed in a couple of securities that are a little bit farther out, more like 6 months, and added a little bit more premium. So, but I feel like I've taken less risk with them. And again, these are companies I definitely want to own. Next, I rolled a cash secured put. And I did this with ARC. Now I still own ARC, so this was a way to this is probably my craziest trade of the month. And I've taken losses with ARC. I actually closed 2 positions, and I believe back in December or November, and took losses. This is 2 contracts that I have, and at the time it was at 98. And so what I did is I rolled way out to 119.24 with a strike price of 85, and just to kind of get out of trouble. Now at the time it was at $78, and now I believe it's come down. It's like $72 or $73. So I spent quite a bit to close the previous position and open a new one, but I netted $231. So some of you probably don't agree with this trade. You probably think, well, I should have just taken the loss. But I believe that ARCs will come back, and it may take a year or two. So I'm pretty confident it will be above 85 at that time. And I guess I've tied up that amount of cash. But in order to kind of get out of trouble, this is what I decided to do. And I mentioned here buy outer arm. So I could buy an outer arm as I get closer, Right now, the outer arm's really expensive, but say 3 to 6 months out, it would be not too expensive to buy an outer arm and reduce how much cash I need for that position or margin that I need. So that's probably my craziest. Add a comment below if you think I'm a little nuts with it, but hopefully it won't bite it, go down a bigger hole or cause me to have a bigger loss. So next, I did a vertical put credit spread on this is Walgreens WBA, and I did it at 47.50 with the outer arm at 40, and the let's see, the delta was 20, right at 0.202, or just slightly higher than a 20 delta. And for this trade, I made 107. So, and I've again, Walgreens is another company that I'd love to own. And right now, it's I believe I rolled it again just this past week. So, and it stays in this close to this range. I think it may have gone down a little bit more. Like I think it may be 48 or 49. So 107. That was my one of my lower trades. I didn't make as much premium on it, but again, it's if I end up owning it, it's okay. It's a company I like. Next is a vertical put credit spread on Cisco. Again, another great company. I believe it's A rated by Cisco. And I sold a 50. I opened a contract at 50 and I bought a contract at 37.50. At the time, it was 55. This I have not done anything with. I believe Cisco just today came out with good earnings. Something happened because they're up $2 or $3. I think they're maybe at 56 or 57. So this will probably expire, and then I'll look at next week probably to pick up another trade with Cisco. And again, Cisco is a great company, good earnings, good dividends. And for this trade, I did 149, and I did two contracts. So Cisco is one I have done lots and lots of trades on, and I've done really well with it. I've never had any issues. It's never come close to being assigned. So next is Ford. I did a cash secured put on Ford, and I sold it to open at 16, expiring. This would be next Friday since today is February 17th. And I did this at 0.25, so a little bit of a higher delta. Like a 75% chance it'll expire out of the money. At that day it was like 18.4. I believe now it's like $17 and something, like 17 and a half. So I'm probably going to roll this next week. But I did good. I made $178. Again, this is three contracts, mainly because Ford is inexpensive. It's $15 a share. And I like Ford. I like their new trucks. I like their electric truck. I like what they're doing. My son's a huge Mustang fan, and I'm looking at maybe purchasing a Ranger late this spring or maybe early summer. So it's something I want to own, and this is it's kind of in a way like a gift. I'm going to end up giving him these Ford shares down the road. So next, let's move on. This is the 15th trade. This is a vertical put credit spread with Apple. Again, I do trade Apple, not very often, and this is sell to open at 140, and the outer arm was at 130, and I did these at 0.173, so not taking a whole lot of risk. Now, I believe that Apple is back over 170 again, so these are way outside the money. Now, I probably would have closed them, but I found that a lot of people have bought put options, and it's made it hard to get out of the position because I guess they bought at those levels. So I'm just going to let this expire next week, and then if Apple has a major down day, I'll probably looking at doing another trade. But I like this 140, 130 range. I'd be more than happy to own Apple at 140. And then I made 221, so not bad on that trade. Apple always has a lot of premium, and you can make some good money, but like I don't like to take a whole lot of risk with it. But if I can get it at these ranges, usually if I stick to a 20 delta, I can do the trades at a fairly safe level. So, and then last but not least is Lumen. Now, Lumen is one of my favorites that I've been trading, and I sold an option at $10 expiring on 1/20/23. So I went out a year um, for it. And Lumen is a good company. They did miss slightly on earnings, so I think they're down right around $10 currently. When I did this trade, they were over 12, but they still have good income. They're buying back shares. I like their fundamentals. I think they're going to bounce back. I wouldn't be surprised if mid, mid April they're 12 again, 13. I may even get as high as 15. And I did two contracts and I made 234 since January. I think I've done another three contracts on Lumen, mainly because at $10, they're paying close to 10% dividend too. So, to be able to earn that kind of income through dividends is also a really good thing. So, I might even pick up some of these. So, I may just buy them in the next major down day if I can get them at $9.50 to $9. So it's a good company. Again, it pays outrageous dividend and something I've enjoyed owning. And I've done this is probably the last trade where I've only done two contracts. I'm doing three. I may even can do five because at $10, five contracts is only like $5,000. So, and if I did it along the lines of a vertical put credit spread, then I could maybe even make a little bit more. So Lumen is to me, it's not real risky. At $10, it can't go down that much more. And like I said, they're buying back shares and they're restructuring, and I think it's a good company. So those are the 16 trades, and I did 3,012, and I averaged 188 per trade, so not bad. And then if you look at that, ends up being like a 6% yearly return for my account. So it's like a 0.5% per month, but that's a little misleading, mainly because a lot of those assets that I have in these brokerages, I do sell covered calls, but I only have I think 104,000 is what I'm showing here in cash. So primarily, I if this was all cash, I could probably do twice that. I've been able to find in my retirement accounts I can do closer to 1% monthly or 12% yearly. But in my brokerage, which is already very invested, it has lots of stocks and ETFs and different things I've already invested in. I can't reach that 1%, at least without, if I could, I probably could if I took a ton of risk, but I don't want to put my whole brokerage at risk. So, and then let's see, like I mentioned earlier, I did four covered calls, eight cash secured puts, and four vertical put credit spreads. And I did four trades on 124.22 for 655 a month. And then two other days I did three trades. And this was very passive. I didn't spend a whole lot of time on doing these trades. So I would guess maybe 10 hours, 11 hours. I spent a lot more time doing these videos. But it's very passive. And it's allowed me to reach financial independence sooner than I ever thought possible. Now I'm still working mainly because I like to, and I'm only doing things I like to do, which has been a big difference, not having to go to a specific office or have these deadlines that other people set. It's been very enjoyable actually doing this trading and being able to make this additional money. So, as always, I hope you have a wonderful day, and thanks for joining me.